Hey guys, Joe here from JCS-Charting. It's Sunday the 5th of January. We're going to have a look here at the DAX US markets, and I try to cover gold and silver because all of them have something in common in my opinion. They all confirmed secondary lows last week, if I'm right, and that might be quite important for the next upcoming weeks. As always, I would like to start off with the DAX, and what you see here, this is one of my indicators I use. It measures the short-term health of the market. It considers the last 20 days, it measures the positive trend, the tranquility, the sentiment, and so on. That is what you see down here, and whenever there's an over or an extreme reading in the negative at this index here, and this is, as I said, for the short term, there is usually something associated with a pop to the upside. We have seen that here, we have seen that here. That was actually a very long sideways rotation. It ended up a little bit higher before DAX found another decline in August. The same here, and this was actually a bigger decline last year in autumn. What is more important is if we compare the chart I just showed you to the one you see here right now, it measures the same signals, but this is for a longer period, so it measures the midterm of the DAX health, and what you can see is that decline we had here and actually never turned into a negative. It happens either if we have a very sharp decline like we experienced in August, or we are moving sideways for quite a while. So the midterm is actually still on the positive trend, which makes me to believe that DAX could run also higher, but it is not as clear as the US markets for me. And we are staying with the indicators. I just want to show you the smart money of last week. Thursday, it changed a bit on Friday, but what we can say is overall, with that decline, of course, smart money came down, but it kept rising again the entire week. And this chart here actually confirms the smart money flow as well. It shows here the percentage or the ratio of volume of advancing and declining periods, and what we notice is that volume actually picked up on the upside again. So this is upside volume, which only can be explained with big guys actually entering the market once again. Okay, I try to keep it as simple as possible for the DAX because there isn't much to say from the technical standpoint. This is a very clean, basic hourly chart of the DAX cash indication from the official Xetra. Here is a period of November, that W-shaped bottom. I was buying that bottom here very heavily, and I took large gains at that 20k area. I think altogether I made almost 5,000 DAX points once we were taking our gains here. I know it was too early. We were running 500 points actually higher, and I was building up short positions, and we closed them all with nice profits during that decline. The last position I was actually exiting last week Friday. If you want to join us at my Discord, you're welcome to sign up at jcs-charting.com. There are two packages you can book. The basic is for the DAX and the US markets, and the other one also includes trading ideas, setups, especially the intermediates are very profitable. They have a hit rate over 90%. They are timing setups, and there are also plenty of other various markets, and by now I think we have over 80 stocks in my analysis. Coming back to that chart. Now, by measuring from that low in November, from 18,812 to the all-time high at 25.22, DAX has corrected 50% of that, almost on the dot. So this is a very clean and healthy correction of that rally. The big question is, have we found a primary cycle bottom right here, or are we looking for one right now? This is what I still favor, and this is what I also told you on my last video. I'm looking for a second leg down, very similar to this one here, because most of the time these corrections, they don't come by itself. There's usually a second down leg associated with it. However, all these indicators I use, they tell us a kind of different story, and this is why I'm a bit uncertain about DAX. Okay, I've zoomed in the chart here a little bit, and a lot of people come up with a bearish flag channel. It's not as clean here at the cash, but at the JFD, which is basically the futures indication, it's actually a clean bearish flag channel. It at least qualifies for it. But I still have a problem with running only to 20.028. In my point of view, that correction here from that decline, so that little bounce isn't enough. In my point of view, usually DAX runs to the 61, and once we measure from the all-time high to that low, I assume at least something to the 2190 area or even higher. And now it becomes interesting. I draw here a horizontal line, which is also a neckline of a so-called cup and handle, which triggered already. The targets can be seen at my channel, and there's also a magnet level at 20.094. If this gets triggered, we run into that min target zone, and we also close that gap here at 2260, which is, in my point of view, the crucial level for DAX if we run for a second leg down, or if we're actually going for new all-time highs. Okay, this is the last DAX chart for today. Here you see that 50% retracement of that rally I was just showing you, which was also the October all-time high. So this looks actually like a very clean back test. Here in yellow you see the 50-day moving average. And on the second we got another so-called pop gun created. First we had one here at the bottom. This candle was trapped in between this one and this one. It's a bit tricky because of the holidays in between. However, this one here got cancelled out because we have a new one right here. And if we duplicate 100% move to the upside, we end up at the 61.8 retracement I was just talking about, just below that gap at 2242. If it pops to the downside, we do a retest of that low, almost, yeah, on the dot here, which is also the 50-day moving average. I still prefer a pop up first, and we'll need to check on indicators and all other tools we have if we run down here for a second leg, or if we follow the US markets, because I have a feeling they're gonna hit new all-time highs pretty soon. Okay, we continue with the US market. This is my S&P 500 channel at my Discord. This here is, for example, smart money. We measure that for all other indexes, the Nasdaq, the DAX, and so on. And what we have seen on Thursday is that smart money stopped selling into that weakness. That was another reason why I personally kept building up my long positions. This here is the AA retail sentiment, and I was also posting that on X. Whenever these two lines, the blue and the red, come close to each other or even cross, it usually marked a turning point in the past. Yeah, and last but not least, also worth a look at is the put-call ratio, which started dropping on Thursday heavily. We were just above 1, and we are back to 0.8 on Friday's session, which tells us big guys are actually putting out their securities, and usually when that happens, the algos go, or they are actually programmed for buying activities. We jump into the H1 thread of the S&P 500 channel. As mentioned before, I was buying into that decline heavily. Once again, 59.04 was my magnet before the cash opening. At the cash opening, we were hitting that. Min targets were triggered at 59.33 and 59.25, and that got hit in the afternoon, which was the evening session in Europe at 59.33, of course, on the dot. Yeah, and the last chart for the S&P 500 is out of the H4 thread. This is a symmetrical triangle. I was also posting on X last weekend. It changed a little bit. This is a JFD indication with a secondary low as a primary cycle bottom. Here was the primary cycle bottom just before Christmas, in my point of view. The cash has still the same pattern with the horizontal trend line, which makes it a descending triangle. Then we have still that falling trend line by the horizontal line here at the bottom. However, I haven't changed that path. I'm still waiting for that third touch here of that triangle around that 60-20 area, then a pullback, and then I would like to see at least the all-time high to be retested, and we'll see if we trigger that sequence at 60.95 to finally run higher and hit my upper targets or not. Yeah, while having a look at the Nasdaq, same smart money behavior as S&P, lower low, but smart money stopped selling. It actually turned out buying on Friday again. And while looking at the daily chart, we also had a very nice divergence here at these lows. The S&P 500 made that double bottom, while Nasdaq actually made a lower low, and that happened in the middle of an Astro turning date. Yeah, we stay at the daily. This is here the JFD indication, which runs 70 points approximately higher than the cash for some reason. Don't ask me why. However, I just wanted to show you that the futures didn't make a new low at the Nasdaq. It actually stayed above that low from the 20th of December, and it was another backtest of the all-time high out of July, which was right here. That was at the starting point of that symmetrical triangle. We were hitting the first target so far. There's still an open target for the 100% move around 23K. Last but not least, the Dow Jones Industrials. That sell here we had on the 2nd of January completed our purple sequence on the dot. Here you see once again how accurate these sequences are. First, we had a very nice strike here at the 100% level. We bounced off, but then we came down again to finish that sequence off. And on Friday, we were triggering that 42,580 level, that blue sequence. So I assume Dow Jones is running higher in the beginning of next. Yeah, just in time on Friday afternoon, I gave my members this 30-minute cash chart. You see in blue here that bullish Wilbur wave wedge. It didn't touch that lower trend line. This is not required. It is nice to see, but we had that lower low on Thursday, which triggered that pattern, and that target line runs around 43,000 on Monday. Okay, last chart of the Dow Jones daily cash chart. Another pop gun here at the bottom, which qualifies here as a double bottom as well. We had already a pop gun right here, like at DAX. It tried to pop up, but it failed, and to look for a secondary low here at the Dow Jones. Trigger levels are 42,903 to the downside, that bottom, 42,173. Also note that red dashed line worked out nicely in buying. We did so, and most of our trades are already in green. Note that the Dow Jones was the only one topping out on the 4th of December. That was our first bearish divergence here at the top, and it was the only one selling for 3 weeks into that low, which actually qualifies nicely for also a primary cycle bottom at the Dow Jones, right in the middle of our Astro turning date. And also note, I show you another shot. again, a daily chart. This is our moon chart, and I know most people laugh about it, but the Dow Jones likes to have turning points associated with the full or half, not half, with a new moon. On the 2nd of January, we had a new moon, like we had here at the all-time high. The last full moon failed, by the way. It doesn't always work, but as you can see, these dates are associated with turning points, especially at the Dow. Okay, we have a quick look at gold and silver. Just to give you an overview, this here is the middle of November, where I assumed a primary cycle bottom in metals, especially gold, and we had an impulsive up move as an 1, 2, 3, 4, 5. I missed buying that here, by the way. And then we went into a very complex flat correction as an A, B, C. We overshot that high, that makes it a flat. And then gold looked once again very corrective in these ups and downs. However, we were buying these lows here finally around 2600. And since then, gold started rallying just before our negative trigger at 25.95. Below, an hourly close below would trigger that red sequence for even lower. On Friday, we triggered above 26.53. That opened targets all the way up to 2700. In other words, that would mean we are likely to backtest these highs anytime soon. And also note that that sell-off here we had right here just before Christmas and also here last week, that actually generated another bullish divergence to silver, because silver was undershooting these lows and made new lows. So silver is actually running behind and gold is leading. This is what we want to see in the rally of metal. And this gives me, I'm just going to show you the silver chart. So this is silver on the daily basis here at that low of the 19th of December. We undershot that low out of November, where we had already that divergence with the lower low at the end of November compared to the one at the middle of November, but now we clearly undershot. That still could mean that silver, I haven't bought silver because silver has still the possibility to run down into that cycle here into mid-January. So that's why I bought gold only, and I don't see that shoulder-head-shoulder pattern yet, because there's also a bullish Wilbur wave wedge hidden in it that could easily go up to 33 at silver. And also note there's that large descending broadening wedge here in blue, which has much higher targets at silver. Yeah, that's about it, my 20-minute update for this weekend. Leave me a like or a nice comment. I see my members tomorrow at the blog, and I'll also give you some teasers on X. Have a nice remaining Sunday. Thank you and bye-bye.